Welcome back to the Elegante FX Master Course Module 3. We're going to be talking about market participants, okay? The people that participate in trading currencies, okay? Always do that. Always do that. All right. So, the big banks, all right? The most important people you can ever learn about. So, this is a decentralized sector. Okay, the banks will always decide your exchange rates that you trade due to the fact that they have such large amounts of money that they put into the market. So, I mean, I am being serious to you right now, and this is not an excuse for you to not trade. Okay, banks and brokers manipulate the shit out of these markets. Okay, I guarantee you they do. If they want the dollar index to go up, it will go up. If they want it to go down, it will go down. Okay, they will create your bid and ask price. Essentially, that's basically what I'm saying here. These guys are known as the interbank market. Like I said, they tackle ridiculous amounts of capitals every day, billions, trillions, if you add it all up. All right, here are some of the biggest banks that we have that participate in the market daily. Most banks participate in it daily, but these are the biggest ones. You got Deutsche Bank, Barclays Bank, Morgan Stanley, and Goldman Sachs. Large companies as well, large organizations, they will exchange currency every single day, all right, and they do it mainly for business on foreign soil or in other countries, okay, or foreign partners. So here's an example. Apple. So if Apple wants to build a plant in Japan or China, wherever they make their phone, I got it right here, let's see where it says it was made in. Made in China, all right, made in China, not surprised. So if they want to trade in Chinese dollars, or let's just say Japanese yen for this example. So Apple has to take millions of their US dollars and exchange it into Japanese yen to be able to build that plant, that manufacturing plant in Japan. So they have to exchange those millions of US dollars into Japanese yen. That will affect your USD Jappy or your US dollar to the Japanese yen exchange rate. That is where large companies will come into place, okay? So, hopefully you understand that. So also you have the federal government and you have central banks. Governments and central banks will play huge factors into the markets. Now, I'm not saying that they'll play huge factors into the markets by putting money into it. Okay? They're going to play a huge factor by giving speeches. And as crazy as that sounds, it is very true. Okay, you may not know them as these people, or you may have heard of these people. It's the ECB, the BOE, the BOJ, and the FOMC, just to name a few. Okay, these all stand for European Central Bank, the Bank of England, Bank of Japan, or the Federal Open Market Committee. Okay, and that's just to name a few. But these people are taking care of countries' reserves and economic policies like and like taxes and things like that, and and just a lot of things that will affect the fluctuation of currency. All right, they also influence it with fundamental events like interest rates and currency valuations, other economic policies, and usually they have a hidden agenda behind them, okay? So what do I mean by the fact that a government can affect the exchange rate of a currency by giving a speech? Well, what I mean is that say the governor of, or the bank governor of the ECB, Mario Draghi, that's his name, comes out and gives a speech and says, interest rates are way too high, which he never would, but just as an example, interest rates are way too high. Alright, that'll send the euro, and that'll take a huge spike in volatility. The euro will take a huge spike in volatility just because he said that one thing. Alright, and people will go crazy, but people will start putting in orders and everything, and it will literally go crazy, and it will shock you how fast it will move, alright? Speculators, alright, the good people, aka you and me, the innocents, who lose 90% of their money, who lose 90% of their money within 90 days of trading. I didn't say that right. 90% of traders lose 90% of their money within 90 days of opening an account, alright? So, including this is about 90% of all trading volume, okay? Speculators as Forex business sector players come in all shapes and sizes. Basically what I said there is traders comes in all shapes and sizes, okay? Some have fat stashes of cash that will literally trade millions and millions of dollars, and some roll a little bit flimsy, meaning they have very little money and they don't trade much, alright? Do not stress, okay? Once you move on from the master course, you can be a piece of this cool group. So, obviously, in what capacity would you be able to be one of the cool felines? Sorry. I don't know why I said felines. In the event that you don't know how the Forex market came to be, okay? That's going to lead us into our next module, and we're going to talk about the history of the FX market. But before you can become someone with a fat stash, you are going to have to invest yourself into some heavy education and some heavy studying, okay? That is the way to becoming a trader, all right? I'll see you guys in the next module.